Most people watch closed sales to measure a real estate market. But here's what's interesting. The smarter signal arrives weeks earlier, and it's called pending sales. A pending sale is a contract signed but not yet closed. It's the market's heartbeat, and right now, according to Florida Realtors May 2026 data, that heartbeat is accelerating. Single-family pending sales up 4.8% year over year. May 2026, Florida Realtors Condo Townhouse. Pending sales up 9.0% year over year, May 2026. Florida Realtors, what the numbers actually tell us. New pending sales of single-family homes rose 4.8% year over year in May, while condo townhouse pending sales surged 9%. Florida Realtors chief economist Dr. Brad O'Connor described the condo townhouse gain as strong enough that its streak of positive year-over-year closed sales is almost assuredly safe going into next month. The single-family number, while positive, leaves the closed sales streak with work still to do as we move deeper into summer. For Gulf Coast buyers and sellers in Sarasota, Siesta Key, Longboat Key, Naples, and beyond, these numbers are more than statistics. They are the early indicators of where pricing power will sit in July's closing table. The open-minded thing to consider: the Fed factor mortgage rates remain the variable that can accelerate or slow everything. And right now, the Federal Reserve is sending a more cautious signal than many buyers hope to hear. New Fed chair Kevin Warsh led his first policy meeting this week, holding the Fed's key interest rate steady at approximately 3.6%, where it has sat since December 2025. The decision was widely expected, but the language surrounding it matters more than the hold itself. Current Fed key rate 3.6%, held steady since December 2025. Federal Reserve June 2026. U.S. inflation rate 4.2%, three-year high driven by energy prices June 2026. Inflation has climbed to a three-year high of 4.2%, largely driven by higher gas prices. That number is the primary reason the Fed's hands are tied. The Fed is now expected to drop language signaling future rate cuts and adopt a more neutral stance, with several policymakers suggesting the next move could be a hike rather than a cut. Updated projections likely show no rate changes in 2026, with possibly one or two cuts arriving in 2027. Here's what this means strategically. If you're waiting for rate relief before acting on a Gulf Coast acquisition, you may be waiting longer than the headline suggested even a month ago. The open-minded thing to consider is that the buyers who move now before competition intensifies when rates eventually do fall are the ones who capture the best assets at the best prices. There is one meaningful wildcard. Dr. Brad O'Connor of Florida Realtors noted that if the recent U.S.-Iran peace deal holds, energy prices could fall, which would reduce inflationary pressure and open the door for the Fed to act sooner. Oil prices have already dropped on early deal news. Whether that translates into sustained rate relief depends on how the geopolitical situation develops. For the wealth-focused buyer, this is clarifying, not discouraging. Certainty on timing is rarely available. What is available is Florida's structural advantage, and that doesn't move with the Fed funds rate. Why Florida's structural advantages change the math. What if I told you that the state where you choose to own property can save your family hundreds of thousands of dollars over a generation? Florida's three structural wealth advantages are not marketing. They are law. No state income tax. Florida has no personal income tax. Rental income, business income, and investment returns stay intact. No state estate tax. Florida does not impose a state-level estate tax, protecting intergenerational transfers. Homestead exemption with portability. The Save Our Homes cap limits assessed value growth to 3% per year. When you sell and buy again in Florida, you can port that accumulated benefit to your new home. For high net worth families, these three features stacked together make Florida real estate one of the most efficient wealth preservation vehicles in the country. The Gulf Coast summer opportunity. Just imagine owning a waterfront property in Sarasota or Naples during a period when buyer demand is rising, pending sales are up, inventory remains historically moderate, and Florida's structural tax advantages compound every year you hold. That is not a lifestyle pitch. That is a wealth strategy. The good news is that the summer of 2026 is opening with momentum rather than stagnation. The pending sales data tells us buyers are moving. The question is whether you will be positioned ahead of that wave or chasing it. If you are ready to explore how Gulf Coast real estate fits your build, protect, transfer strategy, reach out directly. With deep roots in Sarasota, Siesta Key, Longboat Key, and Naples luxury markets, bring the kind of market intelligence and strategic guidance that serious wealth builders require. Brandy Loebker at thecoffeegroup.com, or visit us at thecoffeegroup.com.